Now, K. Venkata wants you to elaborate on expense ratio. He asks, is NAV inclusive of expense ratio? Also, exactly at what stage are the expenses deducted?
Okay, so first of all, you can think of expense ratio as the cost that a fund company charges you for the services it's providing to you. And on top of it, there could be certain additional costs added to it, like the distributor's commission, in case we are talking about the regular plan. So in a nutshell, that's what an expense ratio is. Now, the expense ratio is not charged on a particular day in an year. It is charged on a drip by drip basis every single day from the NAV. And the NAV that you see that the fund discloses every day is after charging for the expense ratio. So for instance, if a fund is charging 1% of its AUM as the expense ratio, then this 1% is not charged on a particular day, but every single day a very small proportion of this 1% is charged from the NAV. And after charging that, the NAV is disclosed. Beyond NAV, there are a few other nominal charges that you would have to bear. For instance, at the time of buying the fund, you have to incur a stamp duty, which is at the rate of rupees 5 per rupees lakh of investment. And likewise, at the time of selling, there is a securities transaction tax that has to be paid, which is at the rate of 0.001% in case of equity funds. So those are the pretty nominal charges which sit outside of the expense ratio. Otherwise, expense ratio factors in your overall cost of ownership of the mutual fund units, and the returns that you calculate basis the NAV are the actual returns that you get, because as I just explained, the expense ratio has already been factored into while calculating the NAV.
All right, now